But what do I think is happening with the Bitcoin price? Liquidity is drying up. TGA refill. I think there's a large part of the U.S. economy that is very illiquid. Capital is scarce right now. But what do I think is going to happen? I continue to believe very fundamentally that the U.S. government and the Federal Reserve are acting in a way of survival. They are on their deathbed, and there are a few ways out. Nuclear war, that's uninvestable. We're all gone. Or the exit valve is the US dollar.
The US is on financial life support. Liquidity is drying up and the Treasury can't cover its own debt without destroying the dollar. As the dollar collapses, Bitcoin will reprice higher with violent force as the only viable asset outside the system. That's the latest message from Jack Mallers, CEO of 21 Capital and Strike. The US economy has been living on borrowed time, propped up by reckless spending, mounting debt, and a Federal Reserve trapped by its own policies. What we're seeing now could be the last gasp of a system stretched to its breaking point. Inflation acts as a hidden tax, draining savings, wages, and futures, while every dollar printed and every bond issued shifts wealth from ordinary Americans to the very architects of this crisis. Meanwhile, crypto investors are left wondering why this cycle feels different and where the explosive rally has gone, but the answer is right before our eyes. Liquidity is being drained to fund government deficits, leaving risk assets starved. But according to Mallers, this is precisely the setup for Bitcoin to shine. So make sure to stick around until the end of the video as Jack Mallers lays out why the Fed's desperate survival tactics will crush the dollar and trigger Bitcoin's next violent repricing. Before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, here's Jack Mallers with his latest market outlook.
The United States is not cutting rates for jobs or for inflation. They are cutting rates to keep the U.S. Treasury alive, to keep the U.S. government alive, to keep the U.S. empire alive. The cost of that survival is all of you. I'm going to say that again. The cost of their survival is you listening to this show. You, your life, the things you can acquire, the family you want to have, the house you dream of living in. That is the sacrifice and the expense of keeping this empire chugging along. And so think through the framing of this rant as about survival, understanding the task at hand by the powers that be and who they are shortcutting to get where they need to go. So, first chapter for us, I call the liquidity machine. So going into the show, everyone's like, Jack. I thought Bitcoin only goes up. Bitcoin's down 2.5%, which, by the way, come on, chill out. 2.5% is nothing in the grand scheme of things. But yes, Bitcoin took a dip. And I wanted to focus on, I actually think that this dip is very healthy. I'm very excited by this dip. I think this dip is good news. And I want to explain why and just the general trend of what's happening if we zoom out. So this tweet from Arthur Hayes, TGA refill almost done. Target is 850 billion. With this liquidity drain complete, up only can resume. Okay, let's understand what's going on here. So the TGA, that stands for the Treasury General's account. So what Arthur is saying is the Treasury General's account refill is almost done. Think of the Treasury General's account like what it sounds like. It's the it's the checking account of the U.S. government. The U.S. government's checking account sometimes needs to be refilled. How do they refill their checking account? How do they refill their bucket of cash? Well, they sell bonds, which is a way of borrowing money from the market. And so when the Treasury does that, what Arthur is claiming is they're draining liquidity out of the system because a lot of the capital that is in Bitcoin, that is in assets, that is floating around in the economy, then goes to finance the government by buying bonds. Does that make sense? And so every so often, the United States government needs to refill their checking account. And he ends his tweet by saying, once that's done, we can continue to go higher. What does he mean by that? He means we're going to continue to go higher because once the Treasury has their checking account full, they go and spend that money into the real economy. One of the biggest spenders in the economy is the US government itself. And that capital finds its way into Bitcoin, into real estate, into the stock market, into gold, into the economy. And so the Treasury general account is being refilled. That will suck liquidity out of the system. And I think why this excites me so much is Bitcoin continues to be the best expression of fiat liquidity, the best pulse, the best index, the best heartbeat as to how healthy the system is, where the liquidity is, all the way to the Treasury literally refilling its checking account, its money bucket. So just so you guys know, I think that there are serious liquidity issues within the market. We are living in two economies, as I've been saying on this show. There is the ultra wealthy, and then there is everybody else. There are scarce, desirable asset holders, and then there is everybody else. And we'll get into that in detail later in the episode. But the everybody else continues to struggle. The Treasury is draining liquidity right now. And I think Bitcoin is reacting to that. And as a Bitcoin holder, that's what you want. You do not want Bitcoin to be like the S&P 500, to be collecting a bunch of passive flows that backs the Treasury market with its bullshit 10% up every single year that's basically more or less reflecting the increase in M2 money supply. You want Bitcoin to be the escape valve, the exit door, the pure reflection of the devil in the mirror. You understand? So let's take a look and deep dive a little bit into the high level. The high level, zoom out and take a look at the bigger picture. So I pulled up this tweet last episode. I wanted to resurface it. So it reads, in the month of August, the U.S. government collected $344 billion. Now that is from tariffs. So that is income the United States is generating, revenue the United States is generating, new revenue from this tariff program. Good for them. Just one problem. They spent $689 billion. So that is a $345 billion with a B, $billion deficit in 1 month. If you were to annualize that, take that $345 billion, you multiply it by 12, you're well over, $3 trillion of deficit spending in a year. Incredibly unsustainable. So why do I want to resurface this? Well, according to the Wall Street Journal, in September 2025, U.S. individual income tax payments for fiscal year have increased by 12% year over year, meaning the U.S. growth in the income that they take from all of us in taxes, the theft that they take from us via taxes. I just had a massive IRS payment. So the theft, the property theft that they are taking from us in the form of taxes grew 12% year over year. Another interesting stat is the U.S. money supply has grown about 5% year over year. So the money supply is up 5%. Tax receipts are up 12%. How the hell is the deficit higher? Guys, that would be the equivalent if you got a 12% raise, but your credit card bill went up anyway. If you're bringing in more income, if you are printing more money, the deficit is supposed to come down. Despite 12% year over year tax receipts, despite 5% year over year US money growth, despite tariffs, which brought in over $300 billion in a month, our deficits grew. Our deficits grew.
The United States is locked in a debt spiral so severe that financial repression has become inevitable. Yield curve control, endless printing, and suppressed bond yields are the last tools left to keep the Treasury funded. And while Wall Street may lament the destruction of their bond trade, Mallers frames it as validation for Bitcoin. Every attempt to paper over this crisis only erodes trust in fiat, driving capital toward a neutral money standard like Bitcoin or gold.
This chart is from Luke Groman. Okay, this is the blue line is gross federal debt as a percentage of GDP. Okay, You can see from the world wars until when we divorced from the gold standard, you can see this number go down. Now, if you look at the far right, Luke circles this little hitch, this little tiny dip, this little teeny tiny dip, because we want to get this down as a country. And look at his note here. It reads, note that this little drop in debt GDP from 2020 to 2022, so COVID, required 8% CPI, so record-breaking levels of inflation, 0% interest rates, and it aided by massive recovery from COVID and massive year-over-year SPX increase, so stock market up. So just to make that little tiny dent, that little tiny blip, that if that wasn't circled and I didn't highlight it to you guys wouldn't have even noticed. Just that little blip was record-breaking inflation, 0% interest rates, asset inflation through the roof, that then required us to have the fastest rate hike in the history of the United States, that caused all of our banks to fail. And I'm supposed to sit here and believe that we're going to drive this blue line down without real rates negative, without financial repression? Are you crazy? And the point, again, I've shown this chart a million times, guys. The point is this. What do you cut? Listen, we as a government are spending more than we bring in. As the world reserve currency issuer, our major export is the dollar itself. So we have to export more dollars than we import dollars. Think of it that way. Our job as the world reserve currency issuer is to give the world more dollars than we take in from them. I could tell the US government how to solve their problem and it'd take 5 seconds. Don't be the world reserve currency. Now, if you want to be the world reserve currency, if you want to prolong this empire, if you want to keep the show going at the expense of your people, well, then we have to cut spending somewhere. Let's look at this visual. Where do you want to cut? Health and Human Services? Social Security? Defense spending? There is one place where you can cut and you can kick the can down the road. It is the Treasury. It is the interest expense on our debt. So you have to understand, we are not cutting rates to stimulate the economy. We are not cutting rates in a reaction to jobs. We are cutting rates not as a supplement to the economy. We are cutting rates as a lifeline to the U.S. Treasury, to the U.S. government. If we do not cut rates and we do not bring this Treasury expense down, we will default. We will go into a debt spiral. It is over. Game over. GG's. Good game. Sayonara. See you later. So you guys have to understand this, because the mainstream media, the traditional bondholders that have been holding bonds for the last 40 years, they're writing this off as a political fiasco, that Trump is an egomaniac and he's in it for himself and he wants to control the Fed because he's into his own ego. And all of that may or may not be true. But I'm telling you right now, the economic reality, again, money is your time and energy in abstracted form. Money obeys the laws of physics, of Mother Nature, of the real universe. Money carries no opinion. A real money, a hard money, is truthful. I'm telling you the truthful economic reality grounded in physics. We have to cut interest rates, or else the U.S. government fails. That is why they're doing what they're doing. You have to understand that. And then we will understand the implications of that, what that means, who that's going to burden, and who that's going to continue to kill. But what do I think is happening with the Bitcoin price? Liquidity is drying up. TGA refill. I think there's a large part of the U.S. economy that is very illiquid. Capital is scarce right now. But what do I think is going to happen? I continue to believe very fundamentally that the U.S. government and the Federal Reserve are acting in a way of survival. They are on their deathbed, and there are a few ways out. Nuclear war, that's uninvestable. We're all gone. Or the exit valve is the US dollar, is inflation, is a tremendous wealth gap that ensues a ton of violence that we've been seeing recently. So that brings me to the next chapter, which is the third mandate. So conveniently, the Fed suggested a new mandate for itself that does what? Helps the U.S. government prolong its empire at the expense of the people. Okay. So this is from Bloomberg. Fed third mandate forces bond traders to rethink age-old rules. Guys, this is massive news. This story continues to prove out to be exactly what we think it is. I continue to think Bitcoin's going to 250K to $1 million in the nearish to mediumish term future. And so let's get into this dual mandate. So the Fed has quietly legalized financial repression. It's really warming up mainstream media and everybody to understand that they're going to implement some form of yield curve control. So what do I mean by that? This is a snippet from the article. For generations on Wall Street, it was a statement of fact. The Federal Reserve's dual mandate of price stability and maximum employment governed how it set interest rates, invoked time and again from Alan Greenspan to Jerome Powell. So when Donald Trump's latest pick for Fed governor, Stephen Miron, cited a third mandate that it must also pursue moderate long-term interest rates, chatter lit up on bond trading desks as analysts debated what it all meant. To the surprise of many, it turns out that Miron was simply quoting a long-forgotten part of the Fed statute in full. But for market veterans like Andrew Brenner, the import for financial markets was clear and alarming, with potential to upend portfolios. As Brenner sees it, the fact that Miron of Mar-a-Lago Accord fame and newly minted Fed official saw fit to mention the third mandate in congressional testimony is one of the clearest signs yet that the administration intends to wield monetary policy to influence longer-term bond yields using central banks' own bylaws as cover. It also underscores how willing Trump is to upend decades of institutional norms to break down the Fed's longstanding independence in service of his own goals. Now, I think that this screenshot in this piece of the article is so telling because if you read this from Bloomberg, this reads like Donald Trump is doing this because he's selfish. Donald Trump is doing this because he has his own interests. Donald Trump is doing this because he's controlling. Donald Trump is doing this because he's an egomaniac. And we cited some dude named Brenner, Andrew Brenner, who's like, whoa, this isn't cool. This is unfair. For 40 years, all I've had to do is invest in bonds and I've made money and I've gotten rich. And that's what my fund does on Wall Street is I just buy bonds. And this is very threatening to bonds because it's effectively yield curve control and is effectively saying that we're going to print money, cap yields, and we're going to decimate bondholders. And this is wrong, and Trump's a dictator, and blah, 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 blah. They're missing the point.
Traditionally, the Fed's dual mandate was price stability and maximum employment, but under Trump's newly appointed Fed Governor Stephen Miron, the institution is now emphasizing moderate long-term interest rates. Bloomberg and Wall Street analysts frame this as Trump's attempt to control the Fed for selfish or political reasons, with bond manager Andrew Brenner warning it amounts to yield curve control that could destroy bondholder wealth. Mallers sees it differently. This is not about ego. This is not about force. This is about survival. With the US trapped in a debt spiral, the government has no choice but to suppress rates, print money, and prioritize financing its own obligations. To Mallers, the mainstream is missing the point. This shift reflects the system's desperation, and it's why he believes Bitcoin could surge to $250,000 or even $1 million in the near to medium term. Do you agree with him? Let me know in the comments. If you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Don't pass up the chance to stay updated and make informed choices in the crypto market. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.